Welcome to Counters. In this lesson, we'll be looking at two depreciation calculations, one using the straight line method and the second using the diminishing balance method. So let's look at the first one, which is the straight line method. Now, before I start with this lesson, I must mention that in the link in the description below, you'll find depreciation terms that will be helpful in understanding depreciation, and explain terms like salvage value, residual value, depreciation, straight line method, diminishing balance method, carrying value, accumulated depreciation. And if you do not know those terms, I would encourage you to go look there and understand those terms so that you better understand an example like this, so understand depreciation in general. But let's get along with it. Straight line method. So the straight line method is a way of calculating depreciation. It's the most common method of calculating depreciation, and it's also the simplest method of calculating depreciation. We'll see why just now. So here it says that you purchased the machine for 75,000 rand. It has an estimated salvage or residual value of 15,000 rand. And it says depreciation depreciated at 20% per annum using the straight line method. Now, what is the first thing we do when we calculate depreciation? We find the depreciable amount. The depreciable amount is the amount that we'll use to calculate the actual depreciation for each period, and it's the one that will be depreciated over the useful life of the asset until it's fully depreciated. That's the depreciable amount. How do we get the depreciable amount? The depreciable amount is the cost of the asset, in this case the cost of the machinery, which is 75,000 rand, minus the salvage or residual value of 15,000 rand. That is how we get to our depreciable amount. So we take the 75,000 rand minus the 15,000 rand, is salvage value. We get 60,000 rand. So that is the depreciable amount. That is what we'll use to calculate depreciation. So with the straight line method, the next thing we do is that we take the depreciable amount multiplied by the percentage per annum of depreciation. In this case, it's 20%. So we're gonna take 20% multiplied by 60%. So it's 20% of 60,000 rand, and we get 12,000 rand. That's depreciation for the first year. So if the question says that it's depreciated over 10 years, then we take 60,000 rand, the depreciable amount, divide by 10 years, and we'll get depreciation for each year. That's with the straight line method. And then what is the depreciation amount for the second year using the straight line method? It's exactly the same as depreciation for the first year. That is what makes straight line method very simple. The depreciation for each year for a specific asset will always be the same. So again, we take 20% of 60,000 rand of the depreciable amount, and we get 12,000 rand. So the depreciation will always be the same with the straight line method, and that's how you simply calculate depreciation using the straight line method. Now let's quickly move to the diminishing balance method. With the diminishing balance method, it's a bit different from the straight line method, as we'll see right just now. But the depreciable amount for any calculation of depreciation or any method of calculating depreciation will always be the same. So in this case, we have the 75,000 rand minus the 15,000 rand, which gives us 60,000 rand, like it did with the first method of calculating depreciation. What is the depreciation for the first year? Well, I can tell you that depreciation for the first year will be exactly the same as depreciation for the first year using the straight line method. So we're going to take 20%, so 20% of 60,000 rand, and it gives us 12,000 rand. That's the depreciation for the first year. But where the difference comes in with the diminishing balance method, in fact, when calculating depreciation using the diminishing balance method, the way you calculate it is that you take the carrying value of the asset multiplied by the percentage, or divided by the number of years. But in this case, they gave us a percentage, so we'll multiply that by the percentage. We'll use the carrying value. But with the straight line method, we use the cost of the asset. So we always use the cost of the asset. That's if there's no salvage value. But in this case, we use depreciable amount. So with the straight line method, we'll use the depreciable amount, calculate depreciation for each year. But when we come to the diminishing balance method, we don't use the depreciable amount every year, but we use the carrying value every year. Again, there's a link in the description below which explains what the carrying value is. But the carrying value is simply the depreciable amount minus any prior depreciation. So for the second year, we take the depreciable amount, which we have here, 60,000 minus the prior depreciation for the first year was 12,000, and then we put that in brackets, and then we times. So the answer for what is in brackets is called the carrying value. We multiply that by 20%, and we get depreciation for the second year. Depreciation for the third year will be exactly the same way. We're going to take 60,000 rand minus 12,000 rand minus 9,600. That answer multiplied by 20%. So we always use the carrying value when it comes to diminishing balance method, but with the straight line method we always use the depreciable amount.